In this video, I'm going to share 8 common mistakes that people make with credit cards. Avoiding these mistakes can save you money and help you get the most out of your credit cards. So let's get into it. Number 1, paying interest on a credit card. Now this probably comes as no surprise, but financing purchases on a credit card is one of the most expensive ways to borrow money. If you are currently paying interest on a credit card, the best thing that you can do is to pay down your balance as soon as possible. But this may not be possible, so here are some things you can do. First, call up your credit card issuer and see if there are any promotional interest rates available on your account. If you qualify for a promotional interest rate, this could be an instant reduction in the amount of interest you're paying. Second, consider getting a credit card with a 0% introductory rate that lets you transfer a balance to your new card. If you transfer your balance to a card with a 0% introductory rate, you can often get a 12, 18, or even 21-month break from your interest charges. If you're carrying a balance of $1,000, finding an 18-month balance transfer offer can save you more than $400 in interest charges. Finally, consider contacting a nonprofit credit counseling agency in your area. A credit counselor can help you find more cost-effective ways of financing your debt, but more importantly, they can help you make a plan to pay down your credit card debt. Many nonprofit credit counseling agencies charge a fee for their services, but this fee is often minimal and is frequently subsidized by outside grants. Number 2, not setting up automatic payments. Every credit card offers a way to set up automatic payments from your checking account. And if you set up an automatic payment for the full balance on your credit card, you can be assured that you will never get hit with a late payment fee and never pay interest charges. You don't need to worry about remembering to pay or getting a check lost in the mail. You'll save yourself time, headache, and money. But there's another advantage to automatic payments. You can hold onto your money as long as possible. Credit cards offer a minimum grace period of 21 days, meaning that you have at least 21 days to pay after your statement closing date. When you set up your automatic payment on your card's due date, you'll hold onto your money for longer. You may even earn a few cents in interest, but more importantly, you're maintaining liquidity, so if you need cash for something, you'll have access to that cash for longer. Now, while I recommend setting up an automatic payment for the full balance, you should still set up automatic payments even if you are working on paying down credit card debt. Setting up an automatic payment for the minimum payment amount will ensure that you avoid unnecessary late payment fees, and you can always make additional payments to your credit card if you want to pay down your debt faster. Number 3, ignoring consumer insurance benefits. Too often, people focus exclusively on the amount of cash back or the number of miles they'll get for purchases, and they ignore benefits like extended warranty and purchase protection. Now, this may not matter much if you're going to the grocery store and buying bananas, but when you buy expensive durable goods like electronics, kitchen appliances, and cell phones, an extended warranty benefit can pay off in spades. Many credit cards offer extended warranty that can give you an extra year or 2 of protection on many of the things that you buy. If your computer suddenly stops working 18 months after you bought it, your credit card extended warranty protection can pay to have it repaired or replaced. Now, having an extended warranty benefit on your credit card can mean that you don't need to purchase a store's extended warranty, which is more often than not simply a waste of money. Personally, I've saved thousands of dollars thanks to extended warranty benefits on my credit cards. But extended warranty benefits aren't the only consumer insurance benefits that matter. Purchase protection can cover your purchases that are damaged or stolen within 90 to 120 days after you buy them. And many cards even offer cell phone protection that kicks in if you pay your monthly cell phone bill with your card. Number 4, using your airline credit card for everything. Airline credit cards can offer valuable perks and benefits like free checked bags and companion certificates, but airline cards are usually a very poor choice to use for everyday spending. That's because airline cards typically only earn 1 point per dollar on most purchases. When you could be earning 2% cash back, 1 point per dollar is a very poor return on your spending. If you put $10,000 of spending on your Delta credit card and earn 1 mile per dollar, you'll get enough miles to earn about $120 worth of flights on Delta. But if you put that same amount of spending on a 2% cashback card, you would earn $200. Personally, I'd rather take the $200, pay $120 for a Delta ticket, and have $80 left over. If you do want to get access to airline miles, A better choice is to use a credit card that earns transferable points like Amex Membership Rewards or Chase Ultimate Rewards. Transferable rewards programs frequently offer cards that earn more points than similar airline credit cards. Better yet, these transferable points can often be redeemed for cashback or travel through a bank's travel portal or converted into your airline's miles, giving you additional option value on your credit card rewards. Number 5. Seeing your credit card as a status symbol. Many credit cards like the American Express Platinum, the Chase Sapphire Reserve, and the Apple Card are marketed as status symbols. It's no mistake that these cards' advertisements feature celebrity endorsements, prominent branding, and are made out of metal. But the material a card is made from and a card's branding is a distraction. If you're selecting credit cards based on the social cachet of dropping down a metal card when you're on a date, you're probably leaving money on the table. Ignoring credit card branding and focusing on the rewards, benefits, and fees of a credit card will put more money in your pocket. Number 6. Overvaluing airport lounge access. Most credit cards that offer airport lounge access have large annual fees that can be several $100s a year. Now, if you travel very frequently, it can be worth it to pay this much to access an airport lounge. They offer free food, free drinks, and a generally nicer experience than waiting in the terminal. But if you only travel a few times a year, these credit cards simply aren't worth it. Sure, you can justify the cards by saying you're not paying for an overpriced meal at an airport and snapping photos for your social media, but if you're spending 20 minutes in a Delta Sky Club during a layover in Atlanta, how much value are you really getting? Personally, I travel 1 to 2 times a month and twice a year with my family. Having the airport lounge access is nice, but if it didn't exist, I'd probably just pack some extra snacks in my backpack and wander through the airport. That lounge access is worth maybe a few $100s over the course of the year, but certainly not $700. If in doubt about the value that you're getting from your credit card airport lounge access, ask yourself how much you would be willing to spend in advance for a year of airport lounge access if you had to pay in cash. Number 7. Changing buying behavior based on promotions. Store-branded credit cards offering ongoing rewards and perks for shopping at a specific store can be great, and many credit cards offer merchant-specific limited-time promotional offers that can grant you a generous amount of cash back on your purchases. But these credit cards and offers aren't designed to save you money. They are designed to alter your purchasing behavior. If you consistently shop at a specific store and that store offers a credit card that features increased cash back, then by all means use that store's credit card. But don't let a small amount of cash back dupe you into paying more than you have to. Products you buy consistently, like groceries and household consumables, can vary wildly in price between stores, so make sure that you're shopping around. Number 8. Canceling your unused credit cards. If you have a credit card that you no longer use, you might be tempted to cancel it, but before you do that, consider the impact that it may have on your credit. Keeping an unused credit card open can help you maintain a higher credit score because of the way that your score is calculated. Every month when you pay your credit card on time, your card issuer will report this to the credit bureaus. But even if you have a zero account balance, your account will report as paid on time as long as it is open. Further, your credit card will report not only that you have credit available, but also that your credit utilization is low. Finally, every month your account is open, the age of your account increases by 1 month. All of these things help your credit score. Now, if a credit card has an annual fee and you're not using it or getting value from it, it may make sense to cancel it. But before you do, call your credit card issuer to see if there's an option to convert to a no annual fee credit card. Most credit cards can be converted to a card with no annual fee after being open for a year. Avoiding these 8 mistakes can help you get more value from your credit cards. If you liked this video and want to see more from us, go ahead and subscribe. Check out this video over here if you want more rewards, or look at this one if you want to learn about a card that can get you 2% cash back everywhere. Thank you so much for watching, and I will see you again soon.